I want you to picture something right now. Picture yourself at 68. Your alarm goes off at 6 a.m. You get up, you get dressed, you go to work. Not because you want to, because your retirement account ran out. That image terrifies most Americans. And what makes it truly terrifying is that it is happening right now to millions of real people. They did not fail to save. They saved for decades. They invested consistently. They did everything they were told to do. The problem was never how much they invested. The problem was that they were holding the wrong stocks the entire time without knowing. Today that ends for you, because in the next few minutes, I am going to show you exactly what the right ones look like. Before we go further, if you have never subscribed to this channel, I am asking you right now with genuine respect. What you are about to hear is not something mainstream financial media teaches. It is what the wealthiest retirement investors quietly practice every single day. Subscribe so you never miss this level of knowledge again. This community was built specifically for people who are serious about retiring with dignity and real financial freedom. Stock Category 1. Dividend Aristocrats, the foundation every serious retirement portfolio needs to own without exception. Most investors have heard of dividend stocks, but very few understand what makes a dividend aristocrat specifically different from all others. A dividend aristocrat is a company that has raised its dividend payment every single year for at least 25 consecutive years. The truth is, these are not exciting companies. They are not viral. They do not trend on social media at all. They are companies like Coca-Cola, 62 consecutive years of dividend increases, through recessions, crashes, and global financial crises entirely. These companies paid and raised dividends while the dot-com bubble wiped out portfolios completely. Here's what nobody tells you about what a 3% dividend yield does to your retirement income over a 20-year period. $500,000 invested in dividend aristocrats generating a 3% yield produces $15,000 per year in passive income without selling a single share. If you're making this mistake, you are building a retirement portfolio around price growth alone, with zero income being generated for you. Start with the Dividend Aristocrats ETF, ticker NOBL, for broad diversified exposure to all 68 aristocrats in one single holding. Stock Category 2. Healthcare Giants, the single most retirement-relevant sector in the entire American stock market right now. Here's what nobody tells you about the demographic reality that makes healthcare stocks uniquely powerful for the next 2 decades. 10,000 baby boomers turn 65 every single day in America. That number continues through 2030 without slowing down at all. Healthcare spending per person increases dramatically after age 65, and that spending flows directly into healthcare company revenues and profits. The truth is, you are investing in an industry whose demand is guaranteed by the biological aging of an entire generation. United Health Group has delivered over 300% returns in the last decade while consistently raising its dividend every single year reliably. Abbott Laboratories, Medtronic, Becton Dickinson, these are medical device and healthcare companies with decades of consistent dividend growth behind them. If you're making this mistake, you have zero healthcare exposure in your retirement portfolio. And that is a generational opportunity being missed. Allocate 15 to 20% of your retirement portfolio to healthcare. It is one of the most recession-resistant sectors that exists. Stock Category 3. Consumer Staples, the boring stocks that outperform during every single market downturn and recession in history. When the market crashed in 2008, consumer staples stocks fell significantly less than the broader market and recovered significantly faster too. The truth is, people stop buying luxury goods in a recession, but they never stop buying food, soap, and household essentials. Procter & Gamble sells Tide, Pampers, Gillette, and Oral-B, products bought in every economic condition without consumers even thinking twice. Walmart has delivered consistent returns for decades because people grocery shop in bull markets and in bear markets identically every time. Here's what nobody tells you about the true power of consumer staples during the 5 years immediately before your retirement date. The 5 years before retirement are your most financially vulnerable period. A major market crash can permanently damage your retirement lifestyle. Consumer staples act as a financial shock absorber, protecting your portfolio from the catastrophic losses that derail late-stage retirement plans completely. If you're making this mistake, your pre-retirement portfolio is overweight in volatile growth stocks with zero defensive positioning protecting your timeline. Move 20 to 25% of your retirement holdings into consumer staples in the decade before your planned retirement date approaches. Stock Category 4. Microsoft and Apple are the two technology companies that belong in every retirement portfolio right now, without debate. I know what you are thinking. Technology is volatile. Technology crashes. Technology is not a retirement investment at all. Here's what nobody tells you about how Microsoft and Apple have fundamentally transformed from pure growth companies into dividend-paying blue chips today. Microsoft has raised its dividend every single year since 2003. It currently yields approximately 0.75%, but grows that dividend by 10% annually. The truth is, a dividend that grows at 10% per year doubles your income stream every 7 years through the power of compounding. Apple generates more free cash flow than almost any company in human history and returns the majority of it to shareholders every year. Both companies have cloud businesses, subscription revenues, and enterprise contracts that make their income streams more predictable than most people assume today. If you're making this mistake, you dismiss technology completely because of the 2000 dot-com crash and missed the most powerful wealth builders entirely. Combined, Microsoft and Apple should represent 10 to 15% of a balanced retirement portfolio, no more, no less than that range. Stock Category 5. Realty income, the one REIT that retirement investors call the monthly dividend company for very good reason. Real estate investment trusts are required by law to distribute at least 90% of their taxable income to shareholders as dividends. Realty income has paid and raised its dividend every single month for over 640 consecutive months. That is more than 53 years. The truth is, if you invested $100,000 in realty income 20 years ago, you would currently collect over $7,000 in annual dividend income. Realty income owns over 13,000 commercial properties leased to Walmart, Dollar General, Walgreens, and FedEx on long-term contractual net leases. Here's what nobody tells you about monthly dividend income in retirement and the psychological power it has over annual or quarterly payments instead. Monthly dividends align with monthly bills. That psychological alignment makes retirement budgeting dramatically more manageable and financially sustainable for most retirees. If you're making this mistake, you have no REIT exposure, and you are missing a legal, tax-advantaged income stream built specifically for retirement. Allocate 10% of your retirement portfolio to REITs. Realty income ticker O is the single most respected retirement REIT in America. Stock Category 6. SCHD, the single most powerful retirement dividend ETF that most Americans have never heard about at all. The Schwab U.S. Dividend Equity ETF tracks 100 high-quality American companies screened for dividend quality, growth, and financial strength consistently. SCHD has delivered over 12% average annual total returns since inception, while maintaining a dividend yield between 3 and 4% consistently. The truth is, SCHD combines dividend income with capital appreciation in a low-cost single holding that requires zero individual stock selection skill. Its expense ratio is 0.06%, meaning you pay $6 per year for every $10,000 invested, almost completely free to hold. Here's what nobody tells you about the compounding math behind reinvesting SCHD dividends for 20 years inside a tax-advantaged retirement account. $1,000 per month invested in SCHD for 20 years at a 12% average return produces a portfolio worth over $960,000 at the end. Here's the retirement stock framework that builds real income and real protection simultaneously without requiring you to be a professional investor. Dividend aristocrats for income stability, healthcare for demographic growth, consumer staples for recession protection, Microsoft and Apple for long-term compounding power, realty income for monthly income, SCHD for diversified dividend growth. That is a retirement portfolio built on logic, not emotion or trends. The truth is, you do not need to beat the market to retire with dignity. You need to survive the market consistently. You have time. You have access to every one of these stocks and ETFs from your phone today with zero barriers to entry. The wealthy families of America, have held these exact types of companies across generations because they understand that boring builds empires quietly. Here's what nobody tells you about the investor who quietly held Coca-Cola, Johnson & Johnson, and Procter & Gamble for 30 years. They never made the financial news. They never went viral. They just retired with more income than they ever needed. Every time. Go back to that image I gave you at the very start of this video right now. The 68-year-old alarm is going off, work clothes on, car keys in hand, not by choice, because the wrong stocks quietly stole the retirement they earned. That is not your story, because you just learned what the right ones look like. And that knowledge changes everything from today. If this video gave you clarity, a shift, or one thing you had never heard before, please like it right now for me. That single tap tells this channel that real knowledge matters and sends this to the American who needs it tonight somewhere. And if you are ready to retire with dignity, with real income and real protection, subscribe to this channel right now. Every single week, we deliver the investing knowledge that wealthy families quietly pass down and everyone else never receives. You deserve it completely. This community is for serious people building serious retirement wealth, one informed decision at a time. You are exactly where you belong.